Fingers crossed it's the right setting. All right, so we'll record the session. We shall record this session. I'm hoping it says it's recording any minute now. Yes, I believe so. All right, I believe it's recording straight to YouTube, not to my device. All right, so look, as I said, we can see that this market has been making higher highs and higher lows and higher highs and higher lows. That is not my opinion. That's a fact. Okay. Now, if that is the case, maybe, and it's always maybe, the market wants to go back over here. Yeah. Maybe. Just based upon what it has been doing, maybe the market wants to get to that orange dot. Now, that means there's a lot of pressure here of potential. It's a discount. So let's imagine, that these ain't even the most luxurious trainers, yeah? Dixie's not, the dollar's not even the most luxurious trainer. It's not even the real one you want. It's not the Louis Vuitton trainer that you really want. But it's like a Reebok workout. Yeah, it's like a pair of workouts, yeah. Or a pair of Air Force One. It's just a standard trainer that is like, yeah, it's not, it's not breathtaking. It's not that, I'm not really getting excited about, Air Force One. They've been around for years. But let me tell you something. When they're cheap, if you went to Foot Locker and you was like, yeah, this Air Forces, man, it's not even the color I really like. Like, they've only got black ones. Just imagine they've only got black Air Force ones. All right. But you went to JD Sports and they was £25. I'm asking you guys, what are you gonna do? Yeah, they're not even your favorite color. They're not even fresh white ones like the plastic. But you went to JD Sports and they've got some mad discount going on, and they are £25, and they've got your size. What are you gonna do? I'm asking. Jigs, Jason, Darren, what are you gonna do? They're not even your size. You don't know your color, sorry. They're not even your normal one you get, but they're £25 fresh.
You're gonna buy. You're not
even buy more. Listen.
Buy in abundance.
Buy in abundance. You might buy a couple for your brethren. You might say, you know what, let me just, Mrs. is always saying I ain't buying enough. Let me buy her a little pair of Air Force One. You got like £25 and normally £100. You're at least going to buy 4. You're like, well, I'll easily pay £100 for Air Force One. So they go for £25. I might as well buy a few of them. Just in case I get a crease in this one, at least I've got another fresh one in the box for me to break open. You're going to buy a few of them, even if it's not even the greatest of markets. So even if you think this dollar maybe getting toppled, you think that the world is changing, you think that Donald Trump's gone mad, you think that the war's going to have an impact, you think that, Putin and this and that and the Israel situation, well, you think all these things, this market is in a real discount. So in my opinion, there's a real pressure onto this market to have some sort of bullish energy. Even if that bullish energy is short-lived, yeah, and people realize, even if this bullish energy from here does something like this, and then goes, actually, we are changing things, yeah, there is still this, pressure, in my opinion, from here for the market, for this market to gain strength. And if the dollar gains strength, pairs that we are trading that look like this, have a look. GBP, yeah, on one side, and USD on another side. Pairs that we trading like this, EUR, on this side, and USD on the other side. Yeah. And we'll talk about these major pairs. Anything, I'm just going to use those two for now. There's loads of them, AUD, USD, you can keep going, yeah. We're thinking to ourselves, if this gains strength, if this side gains strength, yeah, the easiest way I explain this to beginners is I relate strength to weight. Yeah. So if this was a scale and we had GBP on one side, yeah, and we had USD on the other side, for argument's sake, or let's even use Euro USD. Okay, let's use Euro USD for this example. Like this, if this was a scale. If you know what I mean by a scale, I mean a scale that weighs things, all right? So the scale is looking like this. This is the middle of the scale. This is my drawing, guys. This is the little stand at the bottom of the scale. And on one side, we had Euro and another USD. If USD got heavier, because it was gaining strength. It got heavier. It would mean that this scale would start to look like this. Let's do this. I'm going to do this. Let's do this. Oopsie daisy. All right, let's do this. Let's do this. There we go. All right, this means that this scale will do this. As USD gets heavier and gains strength. Yeah. I.e., when we're looking at here, we're thinking to ourselves, oh, I want a winky dink that the Euro USD is in a real premium up here. So there's a real pressure for people to be like, right, this thing's expensive, man. It's very expensive. And like I said, if you had bought those Air Force Ones, you didn't buy 4 pairs, you went and bought 40 pairs. Because you was like, you know what? I don't mind. I do not mind. I'm going to spend a good couple grand. Yeah, I'm going to spend $1,000 buying 40, pairs of Air Force Ones. And you saw that Air Force One's price moved from being cheap down here at £25 to, for whatever reason now, those same black Air Forces were being sold at £100. That's a 400% return. Bearing in mind you bought them for £25. 400% increase. They're 4 times more expensive than when you bought them. And you've got a box of loads of them. Yeah? You've got loads of them that you bought when they were cheap. When they got to a premium, the pressure would be on for you to sell. Because you'd be like, right, I might as well sell these, bro. It's good money I got tied up in these trainers. People are buying them left, right, and center for £100, and I bought them for for £25 each. So there's a pressure on. Now let me explain something. Things can change. Yeah, they can change. And for whatever reason, we could see this, this little dot in here. Oops. We could see the markets breaking this structure over here. We could. The market could have said, you know what? Air Force Ones are just really desirable now because Mr. Air Force Ones died, or there's no more lever to make Air Force Ones, or who knows? Some sort of reason where all of a sudden Air Force Ones just start growing in value. And we're at the shop now buying Air Force Ones for £300, for £600. I don't know. Maybe. I don't have a crystal ball. But ultimately, right now, this market is looking very expensive, and this could be the market for anything. Okay, now that's the overall picture on a bigger macro level, looking at this thing from a bird's eye view. But we are day traders, and as day traders, we have to read and react to what happens in the day. Because even though this market overall may be like, yeah, this market looks like it should come down, well, today it might decide it wants to go up. Yeah, it might just be making a small movement up. It's like you're traveling on a journey. You've got it in your navigation to go in one direction, but your navigation is taking you back streets, and it's actually taking you backwards, so you can get on the motorway to get to where you're going to quicker. It's not going just directly straight towards. Every single mile that you drive, or yard you drive, isn't going towards your destination. You're actually going to go away from your destination for a good half a mile, and then you're going to hit the motorway, which is a quicker way to get to your location. So today we might be going away from the destination. Yeah. Even though overall, maybe by the end of the year, maybe by next year, maybe by another time, this market starts coming down and proving exactly what Jay is saying to you, correct. But right now, today, it might not be doing that. Right now, today, there may be fundamental news. There may be reasons why this market says, no, we're going to keep going up. Yeah. And as day traders, we have to be sensitive to that. We have to go, okay, We're trying to get in and out of the market quickly. We're not swing traders. We're not just bought some GBP, Euro USD, and we're just going to leave it there for the next couple of years and see what happens. Like how some people invest, they just, you buy something hoping that company's going to do very well and the price just keeps going up. This is trading. This is getting in and out of the market and getting your money. A trader will buy an iPhone case, sell an iPhone case today for profit, and then tomorrow go and buy more iPhone cases to sell iPhone cases the day after. He's trading. He's getting in and out of the market, buying for one price, selling for another price. That's what we do as traders. If you're an investor and you're investing in, JP's Gorilla case that protects your case from all types of damage and dust, and you're hoping that my business does extremely well. You're investing in me and my business. You're just going to put some money and say, hey, Jay, here's a grand. I'm going to come back in a couple of years when you're taking over the phone case world. That's completely different to you getting in and out of the market, trying to buy cheap, sell expensive. That's what we're doing as traders. We're trying to buy cheap, sell expensive. Okay. Now, right now in this market, you can see this is Euro USD, and you can see we're in a premium. The market's been making higher highs and higher lows. In fact, even yesterday, this market showed us that we made big outside green candles, meaning the market opened up down here, because if you understand the journey of a candle, candles start bullish candles start in the bottom left-hand corner and finish in the body of the top right-hand corner. Bearish candles start in the top left-hand corner and finish at the bottom right-hand corner. All right. So you can understand the journey of this trade, that even though at some point it was all the way up here, and some point it was all the way down to this wick here, that it opened down here at this price approximately, and we could go over it here. Can you see if we hover over the candles? Can you see all those numbers at the top changing? I know that you didn't know what all those numbers were. I know you didn't even pay attention to all those numbers here. Can you see these numbers here in the little green box? They're all red now. Okay. You didn't even pay attention to them. See how they're changing as I go over each candle? But that is showing you the open, the high, the low, and the close. Someone's going, oh, I didn't even realize that. Okay. You thought this was just numbers just to throw you off and make things look extra complicated. But all they're doing is showing you the open. Look, I said that the candles open near this bottom left-hand corner of the body. That's about 1.5. So 1.15786. Look, if you look to the right-hand side, you can see where that number moving up and down is about 1.5786. It's showing me there. Oh, for open on that candle is 1.15786. The high, all the way at this wick high, if you look to the right-hand side and see there that number's moving, that little black number, is saying about 1.6417. Because that is the high of that day. The low of that day, that little bit of wick that's coming down there, is 1.15746. And the close, which is here, the top right-hand corner of that body of that candle, is showing about 1.6084. That's what these numbers relate to. Okay? That's what these numbers relate to. The open, the high, the close. The low and the close, sorry. Okay, but we can see these outside candles which have left some imbalances in here as this market jumped over here and closed here, as this market jumped over here and closed here. And we can see where the market's come all the way up into here to a real premium that wick was. And if we start dropping our time frames down, we can have a look and see what happened from the high. Okay, so from the high, which was the let's go to the daily. Let's put a little line on it. Well, there is a line on it for liquidity. If we go to our hour time frame, we can see this wick here was the high. And when did that high occur? It occurred in kind of London session. Yeah. Yesterday's London session. In fact, some New York session. So it was the overlap between New York and London, just about here. Okay, we can see it's at 3 o'clock yesterday. We had this high. And then from there, the market came and made a little push down here, pushed up in here, and then we're here. Okay. Now, we understand a few things when it comes to these markets. Okay. One is that the markets move and they they trade towards something that we call liquidity. Okay, liquidity. Now, liquidity is quite simply a fancy name for a pool of money. It's a fancy name for a pool of money. Okay, so what do I mean by that? I mean that this is a game. That you guys must look at this like it's Star Wars or like it's Mario or Sonic the Hedgehog. These charts are a game. The game is, I'd like to take your money and make your money my money. Okay, and you see, when we trade, when we place a bet or make a decision that we believe the markets are going to go up, we don't realize any money, we don't make any money, and we don't lose any money until we are closed out of our trade. That means I could have £100,000 account and I could place a trade, and that trade could go against me £70,000 minus. And yes, I might be having a heart attack. My hairline might be on the slide going backwards every single day. But until I close that position, either be stopped out or I decide enough is enough and I close that position, I haven't actually realized the loss. Because what might happen is I might go to sleep all stressed that, oh my gosh, what am I going to do? I can't believe it. My 100K account is 70,000. And by the time I wake up, the market could have turned around and now I'm 20K in profit. My 100K is looking at 120K. And I'm like, I'm the man. I've just made 20 grand. But until I close that position, I've got to close that position. And until I close that position, those profits are not real profits. They're just on paper. They're just digital. They're just floating profits. They're not real. Okay? So the point is that when we take trades, most time when we trade with something that we call a stop loss. Okay? Now, I know I'm talking to you guys at your babies, and you all know this already, I know, but I'm reinforcing this information so that it's muscle memory. So that when somebody asks you about trading, you can tell them, this is what's going on. This isn't gambling. This isn't, it doesn't make sense. It's just, there is a sense to it. Okay? Because what happens is that, say, for example, when I'm trading now, let's say for argument's sake, I thought this trade was going to go up. Yeah, is that I place my stop loss, for argument's sake, here, below these lows, in this little area here. This price around here, so between this price on the right, 1.16000, and this price, 1.605, I place my stop loss around here. That's the price I say, stop me out. I don't want to lose any more money. And see, and what people don't understand when they're trading is that you are not special. And what you find is human beings and human behavior is quite common to humans. So if you're a human, it's very possible you have similar behavior to another human. Yeah. And what happens is these stop losses and these ideas that the market might be going up from here or going down from here, they tend to pool in an area. Yeah. They tend to do all the same thing. If you want to see human behavior, just go somewhere, go to a football ground, go somewhere when somebody said, why did you start shouting that? And they don't even know when they started shouting that. They started shouting that because everybody else was shouting that. They started running, go carnival and make people start running in a direction. Everybody's going to start running. Why? They don't even know. They saw people running in a direction, they didn't even, especially black people, they didn't even stop to find out why people were running. They said, you know what? Man, I'm running away from something, I'm running away. It's called a herd mentality. Yeah. And it's common to humans. Yeah. It's common to probably most animals. Yeah. So therefore, when you've got thousands, millions of people trading, and you start to see money pooling in an area, remember, this money is pooling somewhere. Like you're giving your money to someone, and they're placing their stop loss somewhere, and they know where your stop loss is. Now, I'm not trying to say that the broker that you are trading against is trying to stop you out. No. I'm trying to say that broker is just a broker. That money still goes somewhere. That order still goes somewhere. Yeah. And I'm saying that the big players, the big entities, the institutions can see where there are pools of money. Because remember, the order goes somewhere. So therefore, that order, just like if you used to place an order for a patty, yeah, maybe the guy sitting outside doesn't know how many beef patties been ordered. Maybe the guy sitting on the table doesn't know how many beef patties have been ordered. But let me tell you something, the kitchen knows how many beef patties have been ordered. Because you placed a physical order. You said, here's my £5 for a beef patty. And he's placed that order on the kitchen, on the slip, yeah, in the kitchen. So now he's looking at all those orders. He's like, wow, we've got 400 beef patties being ordered. We've only got 20 veg, and we've got 8 saltfish patties. He knows that information. Those orders are things that actually can be seen in the market. Yeah, if you understand how to read the tape, to read delta, you can actually see these orders in the market. Now, you can't see an order that somebody just makes, knee-jerk reaction. He hasn't actually placed an order. He just comes in randomly off the street and goes, yeah, let me have that. Yeah. But imagine that you placed that order early. You phoned through for your patty. That order's been sitting on the table. Someone's counted them and they know how many orders have been made for patties. So I'm saying to you that there is always a pool of money in different places where people know, or the powers that be know where these pools of money are. For example, I can see this happening here in Euro USD. I can see this high and this high. These are equal highs. Yeah, and a lot of people saw these equal highs and sold from this level. That's why the price moved from this level. Because there were sellers. The only thing that moves this price is buyers and sellers. Sellers were here saying, yep, at this price, 1.6, around this price, we want to sell. Not once, but even twice. And that might be just one big seller was over here. That might be one big seller over here, because trust me, it's not you with your little £100 account that is moving the markets. Yeah, there might be a big seller over here said, yo, we want to sell. We've got 100,000 black Air Force Ones that we need to sell here. But let me tell you something, one thing you can't do. You can't sell 100,000 Air Force Ones if you don't have 100 people that want to buy 100,000. Who am I going to sell to? I can't sell 100,000 Air Force Ones if there isn't somebody who wants to buy 100,000 Air Force Ones. So what happened is when the price got up to here, this big boy who's over here, yeah, but this big seller over here, represented by a little green creature, whatever that is, yeah, he wants to sell 100,000, but you see over here at this little place here, there was only 40,000 buyers. What does he do? He doesn't say, oh, forget you, 40,000. Forget you, man. You don't want to buy 100,000, I'm not selling. He doesn't say that. He's not stupid. He goes, you know what? Sell the 40,000 or the 400,000. Sell them, yes, or the 40,000. Sell them. So he sells 40,000. Boom, 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 boom. Because as you sell, as you know, anything that starts, supply and demand, you start selling, putting more on the market, the price goes down. And for whatever reason, the same argument that's happening over here is maybe there's a buyer over here. Yeah? And that buyer over there, he's thinking to himself, you know what? I want to buy at this great price. So he pushes the price back up because the price comes down to where he wanted to buy from, and boom, 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 the price goes back up in here. But this seller, he's still got 60,000 Air Force Ones that he needs to sell. So when it gets back up to that price that he wants to sell at over here, He goes, yeah, man, sell the rest of them. Boom, 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 boom. Price starts to tumble again. All right. Now the issue is this buyer's still here. He might buy some more from here. Oh, right, he's over the moon. He keeps getting it at the price that he wants. He's happy about that. He's like, yeah, I've got it at the price I want again. Wow. Let me buy some more. He buys some more from here. He's a big boy. He's buying big boy, buying maybe 20, 30,000. He pushes the price up. Because herd mentality is when the smaller buyers start seeing price going up, they start following the crowd because they're the herd. And when the price comes back up here, the only issue is now, this guy here, he's gone. He sold his 100,000. He's not even in the markets anymore. He sold his 100,000. So now, when people figure to themselves, yeah, that the market, this is a strong level here, the price does this, goes past that level. Why? Because the big boy that was pushing that price down from here has gone. He's got his orders filled. He sold his 100,000. There's no more Air Force One, black Air Force Ones there from no big players, and the price goes past that level. But what we don't know is over here, this is what we don't know, this is the information we don't know, is over here, we've got Mr. Penguin, or whatever this is, and he's got a slightly higher price that he wants to sell his Air Force Ones, and he's got 200,000 over there to sell. So we got rid of 100,000, Mr. Bug, Mr. Beetle. But this guy over here, he's sitting and he's like, listen, I ain't selling my Air Force Ones until they get to this price up here, man. I'm happy with this price. Because we don't know what he bought at. He might have bought over here. He might have bought at a crappy price. So he said, I'm not selling until it gets to over here. So when this price gets to over here, he's like, yeah, that's the number. And what does he do? Start selling his thing from here. This is the markets. These are how the markets are moving every day. Yeah? Buyers and sellers buying and selling the market. Some for very short-term profit. Maybe for all we know, this guy here, Mr. Bear, whatever this is, I don't know what that creature is. Maybe he only bought here. Maybe he's only trying to make this much profit between here and here. But because he bought so many, he's happy with that profit. Because he bought 200,000, he's like, listen, let me tell you something. If I can make £2 on every single one of these trainers, I'm good. I'm good with that. Yeah? If I can make £2 on 200,000 clips and I can do it quickly, I'm full with that. That's a good day's work. So maybe that's the reason why he's holding up for this price over here. This is what we don't know. Obviously, maybe we do know if he bought here, we would see some volume injected into the market and address. Maybe he didn't buy here. Maybe he bought down here. Who knows? Where we can see these big green candles. I don't know. Maybe he jumped in here. But you understand my point. This is what is happening in the market on a daily basis. And all we are trying to do as small day traders with our small little money is trying to work out where those big players are and where and when we might see big moves in the market. Now, when we might see big moves in the market is when all the big bosses come to the markets. Is when the doors are open and all the big players, all the big money man, all the ballers are in the club. So therefore, these little yellow boxes you can see, these little boxes that you can see, these little colors, they are our session. Meaning, one represents the Asian session. This is the part of the world, Asia, because as you know, when you fly to Asia, the time is different. So, you know, when we're up, they may be sleeping. When you fly to America, the time is different. There's a 5 hours difference. When you try and call your people back in the Caribbean, you're calling at a funny time to try and catch them. Because if you call at a time that you think is normal for you, they might be all sleeping and forget yourself how you phone in the house at 1, 2 o'clock in the morning. Because there are different sessions of when people are going to be up and be able to come to your party. So these little things that I'm flashing on and off are representing our Asian session, which is red, our London session, which is yellow, our American session, which is blue, and the London session. These sessions don't just end where the box ends. That box is just showing the most highest volume time within that session. Yeah. So, like, for example, let's imagine this is a rave. All right. This is my analogy. From this here all the way to about here is the rave, is when this rave is open. Okay. Here, this rave is jumping. This is when the main DJs are on the stage and all the gal have got there, you know, in enough time that they're not, you know, their foot's not hurting them and all them thing there. And this is when the rave is popping. After that time period, you know, the rave starts to, you know, the DJs played that song already. The gal them have got baby, you know, they've got youths at home that they've got to look after, or they've got to take kids to school in the morning. People start leaving. The volume of that session starts to teeter off. Yeah, it gets a little injection over here, because over here, for whatever reason, a coach pulls up, the American coach pulls up with a whole new set of girl and man that come to the party. That's where we have an overlap between New York and London, or London and New York have an overlap. And that's when we see the most volume in a forex trading session, is the overlap of London and New York. Okay. However, just if we're just looking at just the sessions purely, London session, which is 7 a.m. in the morning, when man are getting to their desk, we see volume. New York session, when the New York people start getting active, and we see that overlap, we see the most volume. Yeah, an Asian session, we do see some volume, but where by and large, the market kind of consolidates, goes sideways. Okay. By and large, that's what happens. Okay, so ultimately, you know, when we're looking at our markets, we're looking at what may be going on. Sorry. All right, we're looking at what's going on. We're looking at our markets. We are looking at the sessions, because the session, especially for us being in the UK, the Asian session, it gives us an understanding of where there might be some liquidity, where the markets came down and they traded down within. Now, this isn't a great example, but these markets came down here, boom, and they couldn't break through here at 4 in the morning, and then they came up here and they was dancing around here, and you know, it gives an indication that here was some liquidity. But not only does that Asian session, but all sessions, all areas where we see strength and speed from. Like, look at here. This was the New York session. Boom, 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 boom. This level here, this little, you can see a red line, says liquidity. There's liquidity sitting below this New York lows. Just like there's liquidity sitting above this Asian session. Look where it says liquidity here. There's liquidity sitting above this New York AM session. That's why it says liquidity here. And what we see typically from the market is the market taking liquidity, nam, 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 and then running in an opposite direction. That's what the markets like to do. That's to take liquidity and then run in a direction, in the opposite direction. Okay. Now, sometimes this is obvious and the market takes liquidity and runs it, but sometimes the market doesn't care about this Asian session liquidity. The market's really hungry for maybe this liquidity down here. Yeah. Or maybe the market's hungry for this little area, which was within New York. Yeah. Because New York was still going on here. Well, no, in fact, it was closing here. Okay. But maybe the market's hungry for another. We don't know exactly where the market wants to move towards, but we look for signs. So say, for example, this market's just taken this, well, it hasn't just taken this Asian liquidity, because it kind of took it here at 6:30, which we call that Frankfurt opening. So it's Europe, but kind of Frankfurt, Germany open. Yeah. And what we look for is our break of structure, our change of character. What does that mean? That means that when we look at this market here has been simply making some lower lows, lower highs, lower lows. And when we take liquidity, we're looking for the market to change, to start doing something else, i.e. making higher highs and higher lows. Okay, so look, I'm on the 1 minute time frame. Now, those higher highs and those higher lows create a shape. The shape that they create can be identified by 2 letters of the alphabet. One is an W and one is an M. Okay, but we don't want to see a normal M meaning a McDonald's M. we want to see a manipulation M, meaning that the shoulder is higher than the previous shoulder. Because what this is showing as a structure, as the market was making higher highs and higher lows and higher highs, and then the market made a lower low. This is an indication that maybe the market's going to make a lower high and then a lower low. So this is a change, because previously this market was going, previously this market was making higher highs and higher lows and higher highs and higher lows and higher highs and higher lows and higher highs. But now it made a lower low and a lower high. And it's doing something different. So when we see the market do something different after it's taken liquidity, this gives us an indication, this gives us some sort of, wink and a nod that maybe the market wants to move, in this instance, being a manipulation M, that the market wants to move bearishly. And if it was the opposite way around and we saw a manipulation W, i.e. the market looking like this, and just scribble it on, then maybe the market's going to do that and then do this, meaning that it was previously making lower highs and lower lows and lower highs and lower lows and lower highs and lower lows, but now it's made a higher high and a higher low. It's made a difference, especially if it just took liquidity from a level over here. This is an indication that those stop losses, those orders have been hit. That guy who wanted to buy from that price point, his orders have been filled, and the market no longer wants to start coming down. It wants to start pushing up. And all we want to do is try and ride his wave. Pause. We just want to ride that energy and make money in the markets. Simple, right? When I explain it like that, it is simple. It's easy. Okay, and that is the point of what we're trying to do as traders. We're just trying to see where these markets are going to have reactions and to be able to benefit from those reactions. Now, the reality is this. The trend, as in the overall trend, is most definitely your brethren. Yeah, because the trend is showing a flow of energy. Let's go back to our Air Force One's analogy. If those Air Force Ones are dropping in price like this, they're going, you look back in history and Air Force One started at £400. And then generally, they was on average, they remain selling for £300. And then on average, they're selling for £200. Maybe, time's moving on, styles are moving on. People don't like the styles of the Air Force One no more. And on average, you see them trading at £100. Well, just based upon what's been going on average, maybe a few years later, they might be trading at £50 because people are like, oh my gosh, those are old trainers. Those are prehistoric style. Maybe we're going to see some AI trainers that you put them on and they massage your feet and they do this and they do that. And man, I'm looking at these trainers like they're old. And maybe the general trend of these trainers is that they're kind of losing price. They're not at the initial, when they were first launched, £400 per trainer. Yeah? So that's the overall trend. So if I was trying to invest in Air Force Ones long term, I'd be making an assumption that maybe they're going to keep dropping in price. Because that's what's been happening to them. So that trend is my friend. But within this journey, we don't know that within this journey, they start going down and they start getting nostalgic. Oh yeah, well, wow, can you remember Air Force Ones? They go back up, then they go back down and people don't care about them. And then they do a partnership with Louis Vuitton and all of a sudden they start going up in price and then people don't care about them again. And then all of a sudden we see our favorite rapper wearing the black Air Force Ones and they go up in price a little bit. Within that journey, the markets can move like this. But overall, the trend has been going down. So therefore, in an ideal scenario, we want to trade with the trend. Because if we trade with the trend, it's like swimming in the direction of the current. When you swim in the direction of the current, you're going to be going at extra speed. You're going to be like, wow, look at my strokes. I'm going so fast. Well, not really. It's kind of the current that's taking you that way. Whereas if you try and swim upriver, well, you're going to make sure you're kicking like a lunatic. Yeah. Because the overall trend is down. You still might be able to do it. You still might get to the other side of the shore by kicking against the tide. It's going to be harder work. It's definitely going to be harder work. So ideally, we want to trade with the overall of the bigger trend, little trend. You don't care about a little current that's going in your direction. You want to know where the overall direction of the stream is going. And if the overall direction of the stream is going down, you better hope that you're swimming downstream. It's going to help you, right? So when I break down these charts in these analogies, these explanations, these understanding of things that are easy to comprehend, it takes the mystery and magic out of the charts. It's not all mystery and magic and, oh my gosh, what's going on here? It's actually quite straightforward. It's quite simple what's going on. The difficulty is, do you know how to benefit from what's going on? That's the big question. Like, can you get in and out of the markets in time to benefit from this motion? You were selling from up here. Did you know how to get out down here? Because remember, you're only going to make money when you get out. You're not making money from this motion coming down. You're like, oh yeah, look, I've made millions. I've made millions in the market. I've made, prices coming back up. You ain't made millions. You only made millions if you was able to close the trade down here and take those millions and put them in your pocket. It's like people who turn around and go, yeah, they're looking at their house price and they say, yeah, well, I've got about 200K to my name. You don't have 200K to your name. You got £30 to your name. But on paper, you've got some equity in your home. But you ain't really got no bread. You ain't got no money to do anything with. You've got equity in your home, but you don't really have any money to do jack squat with. That's when you hear people say, I'm rich on paper. They're not rich in our real life, they're rich on paper, because if for whatever reason the house prices took a tumble, all of your equity, your value, your worth goes up in smoke in front of your eyes as you see the house prices start to tumble. Especially if you've got you're highly leveraged and you've got quite a large mortgage. All of a sudden, you might find yourself in a situation whereby you owe 100K and your house is worth 90K. Well, last year your house was worth 150K and you thought yourself you had 60 grand in your house. Well, this year you don't, because now all the houses on your street, for whatever reason, are only worth 90 grand. And you owe 100 grand. So you've gone from being 60 grand, I'm rich, I've got some money, to, oh my gosh, I'm actually on paper, in negative equity. So these charts and trading is about getting in and getting out. Where do you get in? Where do you get out? That's the only time you realize your profits. So therefore, a big part of trading is knowing how to take profits. Is knowing when to take profits. Is identifying a high probability area that the market might turn against you. Yeah? So say, for example, as I said this morning, man was in a sell, still in the cell, from up here, is where is a high probability area where this market might stop doing what I want it to do. Well, I just explained the whole liquidity game. I just explained that for this market to go all the way up in here, we must have had a big player over here that did some buying. I don't know whether he's finished buying. I don't know whether or not he's got a billion Air Force Ones he wants to buy here. He wanted to buy maybe from over here, and whether he only got filled 300,000, and over here he only got filled 400,000. Well, he's still 300,000 that he wants to fill the next time prices get down here. So therefore, if I'm in good profits from over here might be a very high probability place that there might be a bit of a reaction as this guy's fills the rest of his orders. I don't know. I do not know for certain. For all I know, the market might just go, the sellers are much greater. Maybe we see a very small reaction here because the 300,000 that he's got left to buy doesn't outweigh the 2 million people that want to sell over here, and the market might have a little reaction to his 300,000 and just keep going. I don't know. I wish I knew. But what I do know is that if I've taken £1 here and turned it into £5 here, at some point I've got to be like, that's a 500% return on my money. I'm happy. Let me take my money here. At some point I've got to be like, I've won. I've got to know when I've won. Yeah? You're never going to be able to get the whole move. Never. Because you don't know when it's going to turn around. You don't know when it's going to immediately turn. Like there's a very few people that are getting in right on the tip here of that little wick here and getting out right on the tip here of some bottom wick. Because how do you know? You don't know. If you do know, please give me a call after the session and let's do something together if you know some stuff. But most people don't know. So therefore, this is why when we take a trade, we might turn and say, okay, the trade we're going to enter here, we're going to place our stop above here, and we're going to place our take profit or look to take profits when the markets come down here. That there is a 1 to 7. That's me turning £100 to £700. Or let's just say 1 to 8 because it's 7.89, £100 into £800. That's me turning £1,000 into £8,000 or £10,000 into £80,000. If you're not happy with that, and what you was actually trying to do is turn £1,000 into £1 billion, well, you're going to be disappointed because the markets the markets move in waves. And sometimes there's a tsunami that causes it to go in the opposite direction. So you're going to feel like a mug if you took £1 over here and turned it into £8 over here. And because you wanted to turn it into £20, the market came back and stopped you out for no pounds. Because you're going to be like, rotted. I had £80 on the table or 8,000 on the table or 80,000 on the table. And I didn't take that money because I was greedy and I wanted to get £200,000 or £20,000 or like, you're going to feel like a mug. Because you go to work every single day and you deal with nonsense and headache for less money than that. So a good way to work out, what amount of money you'd be happy with is asking yourself the very, very truthful question, looking in the mirror, having a little one-to-one slapping yourself. Yeah, like run the cold tap, put your hand under the cold tap and slap yourself in your mouth and ask yourself, how much money do I make a day working? What's that number? Because that's going to be different for different people. Maybe you make £300 a day. Maybe you make £200 a day. Maybe you work and you make £500 a day. Yeah, clearing 2.5K a week on a 5-day week. Okay, so if you take a trade and your trade is your £500 up in 20 minutes, have you not won? Are you not a winner? They're able to make your daily wage without your manager chatting absolute nonsense in your ears. Yeah, without having to commute on the sweaty train with man coughing COVID-27 all over the poles and man playing his music loud from his phone and man who didn't wash his armpits for 6 months sitting right beside you. Are you not winning if you can make £500 from your bedroom or from a beach or from your kitchen or from your garden with your toes in the air from your laptop? I think you're winning. I think you're winning if you could make half of that money, £250, in a couple hours in your underpants. Because even if you added that £250 to your daily wage, because you've still got the rest of the day to go and work, well, you just increased your earnings by 50% by adding a little 2 hours or 20 minutes in your day or a little breakfast club with Jay every morning. I think you're winning with doing that. But see, when it comes to trading teaches you about yourself. And automatically, you start getting extremely greedy. You start believing that the world owes you all types of things. You start thinking to yourself, right, I got in here and I only, used £20 to get in here. And now I'm all the way down here and my money's £80. Yeah. That's 400% return on my money. You start thinking to yourself, boy, I don't want to get out now because maybe the market's going to go down here. Maybe I'm going to be able to end with £300. Yeah, like 15 times my money. But in any other walk of life, man gave you £100, or you gave somebody £20 and they came back and said, here's £80 for your £20. You would take that money fast and put it in your pocket. Say thank you. You wouldn't be saying, no, keep the money and bring it back to me when it's £300. You'd be saying, well, my man just took £20 and flipped it into 80. Thank you very much. And this is when we say that trading teaches you a lot about yourself. Because the greed, the lack of patience, the FOMO, which is fear of missing out, because this started going down here, and because you missed out, you just pressed the button. You forgot your strategy. You just saw it going down here. You heard that Jay was in the cell, and you were just like, yeah, I'm going to get in as well. And you getting down here. And now the market starts moving against you, and you're going to hit stop loss from over here, and then the market's going to turn around in a minute and keep going down here. And you're like, oh my gosh, every time I press the button, the market's go the opposite way. No, bro. Every time you press the button, you don't know what you're doing. Just like if I was to take you to a car garage and say to you, can you fix the engine? And you didn't know what you was doing. How are you going to fix the engine? How are you going to know when to start, where to finish? How are you going to know what screw to unscrew, what nut to unnut? Where to put. You're not going to know jack squat. You don't know what you're doing. And majority of people in the terminal markets do not know what they're doing. So they say, oh, that's gambling, man. Because I put the money in, yeah, and I was up, yeah. I was up. Yeah, I was making fair money because obviously, I researched it, and the gold should be going up, yeah, because we're in a war. That's what ChatGPT told me, and I was going up, and my money was going up, and then all of a sudden, my money just went down, and it blew my whole account. It took my money, and it's a scam. It's a scam because you don't know what you're doing, bro. You're an idiot. It's not scam. You don't know what you're doing. You don't know how to manage your risk. You don't know when to get in. You don't know when to get out. You don't have a clue. You have but nothing, bro. But this is a game. It's a casino. And let me tell you something as well, even worse. The odds are stacked against you. Just like in a casino. The odds are against you. Because these markets move, with volatility. If a spike just turned up from nowhere, this because some news came out, you can't go and complain to nobody. You can't say, "Oh, there's a spike there. That's not allowed." And remember, news is happening every day. Every day, every minute of the day, there is news coming out. Every minute of the day, Donald Trump is going on Twitter and he's saying a madness. Every minute of the day, there's some war in some country happening somewhere. There's some reason why this market can do a madness. So that already means that things are not stacked in your favor. They're actually stacked against you. So therefore, winning at this skill takes experience, takes time, takes you putting in the hours, takes you understanding what it feels like to lose money. Guys, I've lost money in the markets, loads of it. But I'm going to ask somebody else a question. If you go to university and you spend £60,000 or £40,000 over the duration of how many years that you went to the uni or to become a legal practitioner, and now you work in the local council, did you waste £60,000 at university?
Yes. That's so subject.
And the question is like, I'm going to say yes or no, because yes, you supposedly maybe you did, but maybe that experience, that education, those skills that you might have developed, that resilience is maybe what allowed you to become to work with the local council. Maybe it allowed you to get the job. Maybe it made you meet your partner. Maybe it opened your phone book up to a network of people, especially if you were able to go to university outside the ends. Yeah, no disrespect to the ends, but you was able to go and meet different people that don't look like you from different walks of life that have different experience. Their dad isn't, doesn't, work here. Their dad works on an oil rig somewhere, or their dad is a president of, he works in the legal team of this country, or their mum. There's people that have different experiences to you. University might give you the opportunity to meet those people. However, the maths of why you was there, one may say that you wasted the dough. One may say that you should have put that 60,000 in the markets. One may say you use better off learning how to trade for £20,000 and then taking £40,000 and turning £40,000 into £400,000. One may say you're better off taking that money and learning a trade that you could, or a skill that you could set up your own business. So after you've gone to university for 8 years, you still don't have to go with your begging bowl asking somebody for a job. And they could just turn and go, nah. So you just don't fit the business side. There was someone else. We just picked Timothy over you. Sorry. Timothy was just a better fit. One may say that. So I don't want to, so when I'm trading, you see, I look at, this as my hobby, my passion, my university. I have no issues if I lose a trade. I don't have an issue if I blow an account, depending on what's the size of the account and depending on what I have no issues with it because it's part of my education. Because I know that my brother went to university for 8 years to become an architect and he works for DHL or Hermes. And he's got 40,000, 50,000 pounds worth of university debt. That whether you're saying, oh yeah, you can pay it off in every wage rate, it's still 40, 50,000 pound loan that you could have done something else with. So when you start putting things into perspective, I prefer to sit here and learn a skill that I could potentially sit on the beach or in my underpants and make some money from. I could potentially teach my kids this skill, just like you could teach your kids how to be a plumber or how to be an electrician or how to be a carpenter. That is priceless because whether your kid decides to be a carpenter or not, he's actually, or an electrician, it's something he could fall back on. It's something he could say, worst case scenario, boy, a man can go and I can do the electricity for this whole building and I can make a couple of grand and I can pay some and I can put some food on the table. If you don't know how to do that, if you don't have any skill, anything that you've dedicated your time to learning, you're telling me about school education, and the school has only been equipping you to become a good employee in a time where that AI and immigration and the loss of this country even producing anything, jobs are dwindling. But what's the point in you going to school to become a good employee? Think about it. What was the point? I mean, the likelihood is AI is going to take the jobs that school's been equipping you for to do. Or somebody's going to come over from a country, be able to do what you're doing cheaper, or they're hungrier because the country that they came from wasn't as comfortable as the country that you grew up in. So if you would have been there, the odds are stacked up against you there. Yes, maybe in this country you can have a level of comfort, as in you've got a roof over your head and you're able to go on a holiday or 2 a year. But if that is your definition of abundance, then you and I are not the same. More. You have to do the extra. You have to do more than the ordinary, which is extraordinary. That's why I'm looking at this market, because I'm expecting this market to get down to here. Okay. So I am watching this. So I am having a rant, but I am watching it. I told you I am in the sell here. I'm watching this market come down here. Now we're going to go look at other markets real quick, but I'm just explaining to you guys that, when you're talking to anybody, when you bring somebody into the family, Tell them to come to the family and come and listen every single morning. Come and get involved. And they say, "Oh no, I've heard about this trading thing, but it's a scam." You got to ask them. You got to make them sit down and look in the mirror and say, "I hear you, bro, but what are you doing then, bro? What are you on?" "Oh yeah, I'm looking at some. I want to buy some stocks. I think. And what stocks are you gonna buy? And how are you gonna know what to buy if you don't understand the markets, bro? Are you just talking for talk's sake because you sound smart to a room full of dumb people?" Because right now, from the education that man are teaching you here, you can go and trade anything. There's somebody here that's going to turn and go, "Oh, Jay, this morning, let's look at oil. You know, let's look at the oil, not the oil, not a forex. Let's look at the oil futures to see what oil is doing. Because right now, Jay, I wanna invest. I've come into some money. Grandma left me some dough, and I want to invest some money. Yeah. Well, we can turn and go, okay, if that's the case, you want to invest some money, let's look at oil. And the same understanding and education of the markets, of what he was turning around, is going to allow you to at least not be ignorant. Because see, when you go to the doctors, yeah, and you don't know what's wrong with you, and the doctor says, "Yeah, I think you should take these pills." Let me tell you something. I remember distinctly my son, my firstborn, yeah, that they're born, and you make the house nice for them, and you buy them all the best, and you don't want nobody to come in the house with their shoes on, and have you washed your hands before you hold the baby, and blah 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 blah. And you do all of this stuff to try and keep them safe and clean and well looked after. And I remember the time that I took my son and my first son to go and get an injection that he needed to get, yeah. And I cried. I cried as a grown man, not bawling, but that lump in your throat and your eyes kind of watering. Yeah, I wasn't bawling. Yeah, I'm a man's man. I'm not here bawling. Yeah, but I felt I was upset because I sat down there and I realized that that person that didn't look like me, that has no vested interest in me, they're not my family, they're not my friend, they're just a random person, was going and putting chemicals into my child that I didn't even know what it was. And if you really want to go there, they don't even know what it is. I don't know whether or not my area that I live in, they've got some little hidden protocol to kill off all the little babies that are dark skinned. Yeah. And they were just going to inject my child with something mad after I've been tiptoeing around my child since it's been born. And I remember this distinct feeling of like helplessness, that I was ignorant, that I didn't know. So I couldn't say, no, let's not do that, because for all I know, maybe it's best for my child. But something about me thought it wasn't right. Something about me made me want to go and do as much research as possible. And, I didn't go and get all the rest of injections for especially for my second child. Because I just thought to myself, I don't really believe in this stuff. I think it's mad. After I did research, after I had conversations with their moms, etc., with their mom, etc., etc., etc. But I remember distinctly feeling very, very helpless, not knowing. Now let's bring it back to what am I talking about. You cannot come in here and invest in jack squat if you do not know. If you don't have some sort of understanding, you're just going to be relying on what your mate told you he's investing in, or what you heard on Instagram, or what someone said, "Oh yeah, I'm buying some Doge. You should buy some Dogecoin. I'm buying Tesla. Why don't you buy Tesla?" You're not going to have a clue. You've got no education. You can't fend for yourself. It's like even now, when you start seeing all of those things, the worlds were going into war, and it's World War III, and in the event of a nuclear attack, let me tell you something. There's somebody out there who has a little bit more peace of mind if we're going to have a nuclear attack. You know why? Because he's got a bunker in his garden with pure cans of beans, bottles of water, electric, flat screen TV. He knows that worst case scenario, him and his family can go in their bunker and chill out for 3 years whilst the nuclear fallout happens, and we're all down, turn into zombies. He knows that he's going to be good because he's done the work. You get it? He's prepared. So if you can learn these markets and understand how these markets move, understand what you're looking for, I can make a decision. And just by looking at this market, say, you know what? We're in a discount in oil. Based upon how oil has been trading, which has been within this range, this oil future has been trading within this range. If we believe, because of the war, that we might see oil prices shooting up because Iran or these places that have a huge oil reserves start saying, well, no, we're not shipping them to a certain place. Now, based upon this impulse, oil might be in a discount. I am concerned that oil traded up within a premium of this range and had a reaction, because I'm concerned that oil might want to come all the way back down here. I'm concerned about that. I'm concerned if they're restricting flights from different places, just like they did in COVID, and we saw the oil price dive and go down to absolutely nothing in COVID times. I'm concerned that that could happen. But within this trend of the market making higher highs and higher lows, as you can see here by my dots, we're in a discount. So at least I'm in a position of some sort of knowledge where I can make a decision and say, you know what, I'll tell you what I'll do. I've got £5,000 to invest from that job that I did or from that money I won. I'll tell you what I'm going to do. I'm going to buy it. I'm going to put £1,500 into some gold right now, on the hope that maybe, you know, the markets are going to start at least getting back up to all-time highs. Yeah, that's just a very basic example of, at least by understanding these charts and them not scaring us, as how we've gone from being ignorant to having some sort of understanding to make better decisions. And if we're not trying to make better decisions in life, then what are we doing? Because I'm telling you something for free. I don't need to hear the candy dance music again. I know that off by heart. I don't necessarily need to see my football team, you know, that another grown man who has his own family, gets paid 200 grand a week to kick a ball into a net. I don't necessarily need to spend my entire life watching him do that. I need to learn some new stuff that's going to help me and my family. So whether it's this, whether it's starting a business, whether it's your health, you're looking at your health and you're looking at the things that you've been eating, whatever it is to personally develop and to become better, but I embrace personally, guys. I embrace it. So this is just part of my makeup. Being invested in the markets and trying to learn and trying to trade and trying to teach others is part of my makeup as a man in the world. Of personally developing and learning new things. If my dad knew this and taught me this at a young age, I wouldn't be telling around and saying this to you guys that I had to learn this how many years ago, because I would have known it. I would have been invested. My dad would have been invested. My mum would have been invested. They wouldn't have been buying me little gold chains for my holy communion and my christening, or spending money on nonsense. They would have known the value of how much £1,000 is, and instead of going on a holiday, that all-inclusive holiday, they would have said, you know what, I'll tell you what we're going to do. We're going to put £1,000 into this stock, because now I've been looking at this stock for the last how many years. Now is the best time to buy it. And now we're going on a holiday 5 times a year, every year, because they made an investment 20 years ago in Microsoft, in Tesla, in Nvidia. It's because you don't know, and I'm sorry, maybe it's hard to say, and maybe someone here is not the norm. But more than likely, the majority of you lot are not, haven't made your money, or are not from a rich family that invested in Tesla, Microsoft, Google, whatever other company, oil, gas, whatever you want to say. I tell you why? Because they didn't know. And if you don't know, you don't know what you don't know. You can't invest in, this Microsoft company, or this company that has claimed to have electric cars, if you don't know nothing about how to invest, where to invest, what you should be looking for, how to do it. You don't know what you don't know. So it's got to start somewhere. We have to break the cycle somewhere. So if I'm tip of the spear trying to break the cycle right now, I'm cool with that. Someone's got to do it. Let me tell you something. I have never met anybody who's saved their way to millions, saved their way to success. You know, they're working 3 jobs and they just got enough savings there. I haven't met them yet. Show me who they are. Driving around in a Ferrari because they saved their way to a Ferrari. I don't know who they are. I've never seen them. And I'm talking to you. And if it stings, what I'm saying, it's supposed to sting. It's meant for you. I'm talking for myself. I don't want to just be average. I want nice things. I want all those holidays that you can see on Instagram and all these cars and all these jewels and all this. I want all of these things to be my norm. Not to be, I just want to escape for a holiday for 2 weeks and then come back to my shit life. No. To be my norm. So I've got to do something different, guys. And I'm saying to you right now, what you guys are doing without even knowing that you are doing that. By being part of this community, you are doing that. Spread the word. Tell your friends and your family, come in the morning, click the link, get involved. Let them understand what I've said to you, that, you know, something's got to change. Bring your nieces, your nephews, your kids, whoever it may be. Let them come and let them understand. Let them experience what it feels like for Jiva, Jason, other members of the community to be able to turn around and say, you know, I came here, I didn't know something, and now I know something to the point where now I can make money to pay my bills to feed my family. Like, I don't know what a bigger gift is. I don't know what a bigger gift that I'd want from, forget about a friend or a stranger, even from my own family. Because with no disrespect to my mum or my dad, they didn't really equip me with anything that's going to make me be able to feed my family, apart from who I am and making sure that, you know, man had a roof over their head and that, which I'm happy for. I'm not trying to say no, because there are people in the world with less. But it didn't, you know, it wasn't like, you know, hi Jay, now you're 18, here's the family business. Hi Jay, let me sit you down and teach you how to do this thing that when you get to a certain age, you will never have to work for anybody else. You will never have to ask anybody for anybody else. And maybe somebody else did it. Maybe somebody's father or mother did do that for them, and I'm happy for you. But it didn't happen with me. So someone's got to make that difference, right? Someone's got to try and make that change. Because a lot of people can't teach you. It's very difficult when you don't personally develop. I'm sorry for my rant, guys. I do apologize for my rant. But like, it's very difficult if you don't personally develop yourself to try and be more. Like, what are you going to do? You're going to teach somebody. Like, think about the job you do. No disrespect to anybody. Think about the job that you currently do. Is that something you can teach your son or daughter to do? And they can do it independently of the institution that you currently work at? If they can, well done. But majority of people, they work in IT, or they do this here, or they do that there, or they work like they're just a cog in the wheel. They're a cog in the machine. Do you understand what I'm saying? This is why it's extremely important for us to build our own. It doesn't matter what that is. Your own restaurant, your own clothing brand, your own website, your own business, your own, even if it's on the side of you doing your working, because, you know, whatever, I'm not trying to say don't work and do that. I'm just saying it's very important that we build our own, because other people, other cultures are building their own. I always like to say right now that, you know, the culture of the day is the Jews. You know, stew this, stew that, blah, 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 blah. Now, whatever you want to say about these people, however way they even got it, because it's a brand new conversation, about all the help and assistance and certain things that have gone on. Let's skip that. If you go to Manor House or things like Manor House in the UK, I'm just using Manor House as an example. They have a very big Jewish community around that kind of area. You guys are going to know some other areas. But let me ask you a question. You see the Jews that have the Ashkenazi Jews that have the tassels, they have the low hair with the tassels, they wear the outfit, the big hats. You guys know who I'm talking about, yeah? And this isn't a disrespect to them, it's actually an envy. It's actually an envy, yeah, of them. But you know what I'm talking about, guys, yeah? Those type of Jews. Let me know you're still there if you know what I'm talking about.
Definitely.
All right. Let me ask you a question. Where do they work? I mean, it's not, they can't just like disappear. They don't cane around their tassels back so people can't see them. They're quite easily identifiable. Have you ever seen them working in a petrol station or at the local food court, or where do they work? Where do they go to school? Where do they go when they are injured or sick? You don't see them. Apart from if you catch them in the area coming backwards and forwards from wherever they're going in the area. Where are they in the world? Let me tell you. They're at their own church. They're at their own supermarkets, at their own banks, at their own schools, at their own hospitals. They don't need nobody else. They've built their own. And we can sit here all day long and we can say, yeah, they're this and they're that and this and that, which may be true. But if we haven't been able to sit, just like the charts, look at the patterns, yeah, of how this market is moving and say, okay, well, this market has moved like this for however long, and we ain't able to see the patterns of how other cultures have done it. The Asian man builds his own. The Chinese man builds his own. If we're not going to sit here and be like, yeah, we've got to build our own. We've got to do better. We've got to do better. Then what is the point? What is the, just realistic, if you really want to see it, what is the point? So that you can say that you got a fresh car. So that you can say you went on a couple of holidays. So what about the next generation? Are you going to let your little man that you love so much, or your daughter you love so much, you're going to let them start from zero? Let me tell you something. I'm telling you something for free. As easy as I'm here, being JP, I could be in jail or dead, or, you know what I mean, for the things that I've experienced and gone through in my time. For the places I've had to live, i.e. in the hood, yeah, and the type of peers or friends that I've been around, and situations I've been in, it's easy here, I could not be here. Well, you think I want to do that gamble and roll the dice for my sons? Give them a little 50-50. Hey, you people kind to see whether you can be here or not. You think that's what I really want to do? That's not what I want to do. I want more for them. I want more for the next generation, more for us. I don't want us here constantly having that same conversation on a Sunday talking about racism, this and that, blah, blah, blah. That's why right now when you see a man like Captain Traore or whatever it may be, we get so excited because all of a sudden he's talking about doing what? Building his own. Come out of the country, we'll build our own roads. Come out, we'll do our own thing. We don't need you. You've been raping them for long enough. So we have to do the same. On any level that we can do it, we have to do the same. And I just, like I said to you, the trading thing, guys, it's one small element. You know what's more impressive about the trading is that every single morning, Darren is here every single morning. Ready, willing. That Sitson is here every single morning. That Jigs is here, Jason's here. That's more impressive because that shows me that man are building up the muscles to say that they're not just talking about, yeah, they want to do this, they want to do that. They're actually doing it. So when you turn around and say, okay, guys, we're now doing a property session every single morning from Monday to Friday, man, I've got the minerals. Man, I've got the ability to be able to come and do that. When we turn around and say, yeah, look, we want to set up our own bank, our own investment fund, and guys, we're going to invest into this, that, you guys look at me and go, you know what? I believe in Jake because he showed me on certain things. Or you're going to tell me and say, you know what, this makes sense because I've done the research myself, because I've got the knowledge to do the research myself to say this is a good investment. I understand that I'm not going to get rich by saving my little 50 grand, 60 grand, 100 grand. And the joke is this, let me tell you something. The numbers that people actually have to their name is so ridiculous. The average amount of numbers. Man who's never seen 100 grand. Man who don't have more than 3 months worth of savings in their bank account. But somehow they think that the world's going to change, scratching lottery tickets. So I'm saying it's very, very important what we do here every single morning, guys. And the fact that we're seeing, people are seeing success and we're seeing joy, and we have a community that we value. I value everybody in this community. Yeah, even though there's only a handful of people on this call this morning. But we know this is where these things, they start, man. And we can't blame anybody apart from ourselves of where we currently are. Like where you are in your life is where you're actually ultimately supposed to be. And it sounds horrible, but it's the truth. Wherever you are in your life is where you're supposed to be. Meaning that it's where so if it's rock bottom that you're at right now, you're supposed to be there. So you can turn around and go, you know what, I've had enough of this rock bottom. Let me start going to the gym. You know what I mean? And I'm just saying to you right now, guys, we're get back to the trading before we finish up, because I have been going for a little bit. Right now, us looking at these markets and being able to tell and say, look, we're trading and we understand how these markets move. We understand premium and discount. We understand that the investment that needs to be made, what could potentially happen from investing money here and there is powerful. Do not ever diminish it. Do not ever punk yourself by not being here every morning or not trying to at least learn as much as you can do, because you are punking yourself. Unless you've got something else going on, which is fine. This ain't the only way you can make money. This ain't the only way you can get discipline. This ain't the only way you can learn about some new skills. But if you don't punk yourself, man. I see so many men out here punking themselves, believing that their little job that they've got here that's paying them good money now is going to be paying them that same money in the future. Unlikely. A job for life has gone a long time ago. And especially with how you see the world changing, i.e. AI, you heard me mention it, jobs for life do not exist. So if you're not trying to do better, if you're not winning, you're dying in this world anyway. If you're not winning, you are dying. Between, interest rates, between this, between that, between you can't drive your car nowhere without catching a fine, between the food that the poisoning with you. If you're not trying to learn more, do better, you are dying. I'm sorry, but that's how I'm going to describe it. If you don't understand the food that you're putting in your mouth, that you're telling you to put in your mouth is killing you, and you don't want to make a change in that, well, you will find out one way or another. If you don't want to do that course right now in AI, do that course right now in cybersecurity, understand what's going on, set your business up, fail at your business. There's not a problem with failing at your business. There's not a problem with you blowing your account. Fail at your business. Because when you fail, you learn something, At least you'll be able to tell your son, don't do it this way, because I've done it that way and I failed. Why did I fail? Because, there's not enough time for you to cook the food from here to here and deliver it. You have to do it a different way. But if you don't do that, how can you advise your son or your daughter? Do you get what I'm saying, guys? I'm saying it's very, very important what we do in here in every single morning. It's bigger than the trading, all right? So going back to the trading and looking at the markets, EU USD is what I was looking at. And I still believe that we're going to get down to the lows, which yesterday I believed that the market was going to go and do something. It did something completely opposite yesterday. Yesterday we were saying we thought the market was going to go down and be bearish. Well, it broke structures to the upside. It doesn't mean that we lost money. It just means that our outlook, our analysis, just like when the weatherman looked at the window and said today's going to be raining, yeah, everyone was turning around and saying to me that last week Sunday was supposed to be sweltering hot. Yeah, that's what the weatherman said. My son had a football tournament when we got there, but the weather was calm. It was nice. It was cool. But the weatherman used all of his analysis and his tools, and he made a judgment based upon what he knows that it's supposed to be 30-something degrees on Sunday. Something might have changed. A cloud blew in from somewhere, yeah, after he gave that analysis, and it wasn't that hot. Doesn't make him stupid. It just means that, he wasn't 100%. And when we trade the markets, we are never 100% on what's going to happen. It's always that the market could do either or. So right now, we've seen the market from here. We saw London take a turn around at 50% of the Asian session and start pushing down, breaking some minor structure here. And I believe that this market should be searching out these lows here, which is a previous New York. How do I know that? It's this blue box. That's how I know it's New York. AM, this is the PM session. I know that I feel that this market should be searching out these lows. But at the moment, we are getting a retracement in that market. And we can see why we might get that retracement, because we can see all of this imbalance. All right, have a look here. I'm going to wipe my charts because my charts are a bit mad. But look here. All of this imbalance as this market push down here with strength and speed. So maybe this market is just coming up into here to close this imbalance, okay, and then continue making lower lows, lower highs, lower lows. Maybe we're going to get a lovely lower high here, and the market's going to come down here and take out those lows that I'm hoping it takes out. So maybe now may be an opportunity to get in for the sell. However, we have to look at this market and understand what it may be doing and what drives this market. Because what drives this market is the dollar. So does this dollar look like it's going to be pushing up or pushing down is the question. Yeah. Now we can see this little range that I drew. Now, if this dollar loses strength, then GU is going to be going up. Okay, let me say that one more time. And look, you see the box that I drew in here from time, way before I started my run, identifying the imbalance. Well, the market's come and closed the imbalance now, and it actually looks like we're getting some bearish energy. Now, if this bearish energy continues to push down, remember our scale, if USD loses strength because it's coming down, GU is going to keep going up. So, or EU as well is going to keep going up. So maybe this market doesn't turn around now because the dollar is losing strength and continues to push up in here. So therefore, the question is, why did it turn around here? Well, that answer could be that the market was making higher highs and higher lows, higher lows and higher highs, and it did not want to violate this low here. All right, so it came down here, tapped in here, which if we look to the right in here, can we see what we're looking for? Can we see a manipulation pattern in there? Not on the 5, not on the 3, well, not really. Yeah, but there was definitely imbalance in here. If we look on the 5-minute time frame that was being closed, or 15-minute time frame that's been closed, there's definitely imbalance in here. All of this here, there's a lot of imbalance. Yeah, and maybe that market just wanted to come down in here, tap into that imbalance, yeah, and then push. Also, have a look at this. We understand that the markets do this. They accumulate, manipulate, and distribute. Well, this is accumulation. This is sideways action in here of the market bouncing around like this. Boing, 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 boing. Maybe this is the manipulation for this market to push up and distribute higher. Maybe. Yeah. So taking that into consideration, and if we're looking at Dixie and seeing that is the Dixie look like it's going to lose strength? Well, it does. It's in this white range here. It looks like the Dixie could, even if it wants to go up, it could come down here first before going up. Yeah. I'm thinking to myself that maybe it's end of the road here, and this was just a manipulation. And then maybe that market wants to tap in. Let me get rid of this. Wants to tap in. Here we can see a manipulation W in here. It's not great. We can see one on a 15-minute, 5-minute time frame. Maybe that market wants to make a manipulation pattern here, which doesn't really mean too much, but it has taken some liquidity from, like I said to you, below this little area here, has closed this imbalance in here. And maybe this market, so personally, I'm looking at this right now, and I'd say if this market does this and then closes back above here, I feel comfortable to manage my risk, meaning I'm only risking a small percentage of my account, 1 or 2%, and get in for the trade like this on the basis that maybe this market wants to go higher. Now, how high is we don't know. We got to look at places of points of interest. A point of interest would be, for me, if this market starts coming back up in here, it would be these Asian session highs, because we can see these liquidity here and here. And we know that the markets chase liquidity. But if this market doesn't and starts to melt down in here, then we're going for these lows here and here. Okay. So when I'm looking at it right now, I'll drop my time frame down right now, and someone had a gun to my head and said to me, Jay, what is it that you want to do? I would say, gun to my head, that I'm interested in buying this market. We get a closure above here, and I can get in very aggressively with my stop below these little lows here for about 7 pips, maybe even less than that if I'm very aggressive, for 5 pips. Or if I want to be safe, my stop goes down here for 15 pips on the basis that we're going to be pushing up, on the basis that I'm looking at the Dixie, and the Dixie looks like it's coming down, all right, within this range. However, we're still in a little bit of area where we don't know. We haven't got confirmations because the Dixie hasn't broken significant structure in here. It's just broken smaller structure in here. In fact, the Dixie's even been going sideways a bit. Look. All right. Dixie's even been going sideways a bit here. All right. Which may mean that the market wants to come and manipulate here, distribute maybe back up into here, but then it potentially turn around and do this. All right. So I'd say to you, take time in the markets, see what's going on. News-wise, we've got some red folder news in the US at 3 o'clock. I'd say if you can't see anything that's clean and obvious, do not take a trade, especially for the people that are funded. I told you guys, the aim of the game with your funded account is to not blow it quickly. So what does that mean? It means de-risk. If you normally risk 1%, risk 0.5%. Risk 0.5% until you get into a trade and that trade's really motoring in your direction. And then once it breaks structure again, add another 0.5%. So now you're in 1%. Add another half, and then scale into that position, only making sure you stay within your risk of your 1% or so, which you can have. So you can have 20 positions and still only be risking 1% if you've moved your stop loss to entry as markets start to move in your direction. But I would advise you to make sure that you trade conservatively and at least get your first payout, make some profits. Guys, amazing, amazing day. Any questions before we finish up? I definitely ran over, but I'm glad to see everyone stayed.
I have a question
because
I'll be looking to do another account. Copy traders, I know the pros and cons, but just examples of how to use them. And I know there's an MT5 one, but
this is a good one here you can use. This is a good one you can use. It's called Social Trader, socialtradertools.com. There's a few different copy traders, but this was one I've used in the past. It's good. Yeah. And what you do is you connect it to your accounts by putting in your account details, and you be able to say that that account's 100K or that account's 200K or that account's got this and that. You can change all different parameters, and then you can link so when you link the accounts, it simply means that when you do one thing on one, it will execute across all of your trading accounts. It's a great tool to be able to use, especially if you don't want to look at a certain trade or certain amount of money, then you can use your copy traders. However, it is also, I have to say this, it also goes both ways, because if you do a madness on one of them and you've linked it up to 3 different accounts, well, you're going to do a madness on all 3 of those accounts. Do you get what I'm saying? So
I think my main reason for using it is so I don't have to log into
multiple
accounts when I want to use
cool.
it.
That's cool, but I'm just making it known that it's you're controlling the whole army with one hand. So if you do something mad, you accidentally put in a lot size that is 10 times too big than what it's supposed to be, well, you're going to put in that lot size 10 times too big across all of your pits.
But you can activate and deactivate your accounts using this platform as well.
Yeah, you can. And obviously, remember, you've still got the master control in your MT5. You can still just be like, you can close the position manually. You can do. It's not to say that it takes over. It doesn't take over, but I'm just the point I'm saying is that it I'm just saying you're controlling everything with one hand. But this is a good one. And what I would advise to you of how to use it, stuff like this, go on YouTube, man. Just YouTube it, and people will be breaking it down. Exactly how you use it, exactly the best way to go about setting it up, etc. It's the easiest way, instead of us kind of trying to just YouTube it. You can pause and you can look at it and understand how to set it.
Subscription fee for that?
I believe that this subscription fee is about $19 a month, I think. Let me see, $20 a month. Yeah, but this allows. This says up to 2 accounts, so you can't connect more than 2 accounts for $20 a month. So it's like $9. I think when I used to look at it, it might have been like $10 per account, I think, or maybe they even give you. Maybe they've gone up a little bit, but so you can connect 2 accounts. So you can have a 10K account linked to 2 other accounts, I believe. Yeah. So in total you have 3. I believe that's how it works out. Yeah, you have one controlling two others, and that's what it means by two accounts. Either way, that's your start, your entry. But $20 a month is about, I don't know, what's that, 12, 13 pounds, maybe even less now, the way the dollar's been falling to hell. Let's see. Let's see what it's saying. See, now we start understanding these things more. The dollar's been falling to hell. So we know now GU is very high. All right. We know that GU is very high. We're just looking at the charts. So therefore, our pound is working harder, giving us more dollars. Yeah. So it's $1.36 to every pound. Yeah. So therefore, that $20 a month is going to cost you, this is say £15 a month in pounds. It's nothing, but it is something to think about. It's an additional cost. Yeah, but it's nothing, and you can stop it at any time. It's not no subscription, not no Well, last time I checked, anyway, you can stop at any time. All right. It's not like a commitment. All right, but yeah, it is a good tool to use if you're trading multiple accounts. It is, and I was using it for a time. To be fair, I was using it for a good time. Yeah. Anything else everybody else wants to say? Anything else anybody else want to say? Well, guys, I think it's been a great session. I did record the session, I believe, so it will be on. There'll be a link to it. And we kind of went over the basics, the understandings, just making sure it's proper at the forefront of your mind and your understanding, because sometimes people evaluate this trading thing because you haven't made, £500,000 out of the markets yet, that somehow you're failing. Yeah. You're going to ask somebody right now, yeah, I'm doing the trading thing. They're going to, how much money you make? The very first thing they're going to ask you. Do you understand what I'm saying? Yeah. But when you say to somebody, I'm an architect, they don't say, show me the building you've built. Or someone says they're a doctor, the first thing you don't say is how many people have you saved? How many open heart surgery? You don't say that. It's not a measure of your success. The measure of your success is what you're learning every single day. The measure of your success is understanding the world more, understanding yourself more, of how you can manage money, manage funds, and knowing that the light at the end of the tunnel isn't going to be you asking for a job. It could be you turning around and saying, you know what, I'm going to take my family money. I'm going to take this money that I've got from this sale of a house or the divorce or from this and that and the other, and I am comfortable enough to put my own 250K in an account. And every single day, I'm going to risk £100 of it, yeah, which is nothing off of your 250,000. Oh, let's make a nice number. Off of your 100,000, okay, putting £100,000 of your own earned money, and every single day, not risking 10%, which would be 10K, not risking 1%, which would be 1K, but maybe risking £100 of it, which would be 0.1%, on the basis that you have an understanding of how to grow that money. And every single day, you're able to turn your £100 into, remember that question I asked? How much money do you make a day at work? Could you, from your own house, from a beach, from your house in Dominica, Guyana, St. Lucia, Jamaica, Barbados, Trinidad, wherever you're from, Ghana, Niger, can you be sitting there on the veranda with a coconut water, yeah, and take your £100,000 and say, I'm going to trade £100 of it at a time, or even less, £50 of it at a time in the markets, on the basis that I was previously going to work for how many hours? 8 hours a day do people work from? Is it 8 hours? Some people work more, 10 hours a day. And could I make £300 out of my $100, a 1 to 7? Could I take a 1 to 7 trade? Or could I take $100 and be able to take a 1 to 3 trade to make my £300 or £400 a day? That's how you have to look at it. Because if you could do that, your whole life changes. Because now you're making the money that you're currently making on your own terms, leaving the rest of the day for you to do your other stuff, for you to work on your health, to work on your physique or your physical health, to work on your business, to work on your family, to work on your relationship, work on your hopes and dreams. Yeah, what's this? I'm gonna leave you with a saying. All right, I'm gonna leave you with a saying. I'm gonna find it, and I'm gonna put it in the group afterwards. And the saying is, it's coming. All right, because I've got it here. And the saying is, he who works all day has no time to make money. I'm going to say it one more time. He who works all day has no time to make money. That is from John D. Rockefeller. Yeah, let's put it in Google and see what happens. He who works all day has no time to make money. Let's have a, we're going to finish it like this. Have a listen.
In the world of entrepreneurship, the adage, he who works all day has no time to make money, offers profound wisdom. At first glance, it might seem contradictory. After all, isn't hard work the key to success? However, this quote underscores a crucial aspect of business strategy: the importance of working smart, not just hard. The pitfall of business. Entrepreneurs often fall into the trap of equating business with productivity. Spending long hours on day-to-day tasks can create an illusion of progress. However, being perpetually occupied with operational work leaves little room for strategic thinking, innovation, and growth. The relentless grind can lead to burnout and stifle creativity, preventing entrepreneurs from identifying and seizing lucrative opportunities. Strategic thinking over routine tasks. To truly make money, entrepreneurs must elevate their focus from the minutiae of daily operations to the broader vision of their business. This